You're now tuned in to the Desire to Trade podcast, a show where we bring you the best figures of the trading world and teach you how you can become a successful trader. This is your host, Etienne Crete.
Hey, what's up, trader? It's Etienne, founder of Desire to Trade, and welcome to episode 57 of the Desire to Trade podcast. I must admit that I was really impatient to publish this interview. This interview has been done a couple of months ago with someone that's really respectable in the trading world. It's someone that I learned a lot from, and I really hope you can learn as much as I did from him. When you start to research more about trading psychology, you're probably gonna come through the name of Dr. Van Tharp. It is someone that is really known in the overall community in trading, and a lot of people have been looking up to him for all his books and all the things he did. And Dr. Van Tharp is the author of Trading Beyond the Matrix, Super Trader, and a lot more books that have been helping traders for a lot of time. In this interview, we talk a lot about how to deal with beliefs and how to set yourself up, because Van Tharp has done a lot of research about what works for traders and what gives results. If you want to connect with me after the show, check out desiretotrade.com/group. You can have access to the Facebook group for free. Now, I strongly recommend that you listen to this interview until the end, because Van Tharp has something to offer you guys that is going to be free, and it's something that's really going to help you out in trading. So listen till the end and you'll find out what it is. Dr. Van Tharp, welcome on the Desire to Trade podcast. How are you doing today?
Very good, thank you. How are you doing?
Oh, very good, very good. It's a pleasure to have you here on the podcast. And I want you to start by telling us what is one quote that inspires you.
Well, I'm very much into the impact of beliefs. So I really like this quote. You experience what you believe, unless you believe you won't, in which case you don't, which means you did. That comes from Harry Palmer, who's the founder of Avatar.
Wow, I love it. Can you explain a little bit how you would use that quote?
Well, basically, reality for you is your beliefs. You shape your own world through your beliefs. And that's why I always say you never trade the market, you trade your beliefs about it. But of course, they don't teach you that in basic psychology. And I recently talked to a new psychology undergraduate she'd just gotten her degree in psychology. And I said, do you believe your experience is shaped by your beliefs? Or did they teach you that? And my expectation was that that's not what was taught. And she said, no, I don't believe that at all. So that was proof that her experience is that she doesn't.
That's interesting, though. So just to recap, because I want the listeners to know exactly who you are. So you've written a couple of books, and I think they're really great in terms of trading, great in terms of really revolutionizing the whole trading world. So you wrote Trade Your Way to Financial Freedom, as well as Trading Beyond the Matrix, and a few other books. I want you to tell us exactly how you started to get involved in trading in the first place.
Well, I've actually written 11 books, so you just mentioned 2 of them. And I give, I think, something like 9 workshops, so which is about 25 days worth of workshops that I do myself. Well, basically, in my early days, I had 2 episodes in which I lost a lot of money in the markets. My background is in psychology, and I made the assumption, at least after the second one, that it must be me and there was something wrong with me. So I began a research project to figure out what was wrong with me. And my consulting business and training business came out of what I learned from that.
So if I were to ask you, what are the few things you learned from that research? What are they? Is it about beliefs or is it about something else?
Well, first of all, I'm an NLP modeler. NLP stands for Neuro-Linguistic Programming, and you can use various NLP models to figure out how people excel. So to model trading, for example, you have to find a number of people who do it well. You have to find out the common tasks that they all do. So maybe somebody will tell you their system and think that's the secret, and you'd find 10 different people with 10 different systems, and then you conclude, no, that's not the secret. So you have to find out what they do in common, and then you find out 3 ingredients from each of those tasks, which are beliefs, the mental state and mental strategy for doing each task. And then you have part of the trading process. So I've modeled the trading process, I've modeled developing a system, I've modeled the wealth process, and I've modeled how to meet your objectives using position sizing.
And all that has allowed you to basically become a full-time trader, or have you been involved more into trading?
Well, my passion is really our mission is transformation through a trading metaphor. So, I'm 70 years old this year, and I could have retired a long time ago, but I really love what I do. And it's not about money, it's about changing people's lives. And I manage we have a substantial company retirement fund, and I manage that quite successfully now. But my passion is changing people's lives for the better.
Yeah, I think this is totally awesome, man. I've been through a couple of your books, including Trading Beyond the Matrix, and I really love the approach you use and how you show how people can be a successful trader, basically. Can you tell us what would be a successful trader in your own opinion?
What would be a successful trader? Well, boy, you can ask that question of anybody, and it's all the meaning they give to different words, like what's a trader and what's success mean, because you can ask the very same word will give different meanings for different people. So a trader is someone who's pretty much in and out of the markets quite rapidly, and successful means they're pretty happy at what they do with it. So I'm fine it that way.
So it's based on their own definition, right?
Right.
But of course, people have to be good traders. They have to know how to trade.
Well, I'm assuming they're happy. They are.
So for people who are at this point right now, I'm pretty sure you meet a lot of those people. They're trying to trade, trying to make their way through trading, but they don't know exactly what they need to succeed. How would you go about telling them what to do if they want to reach a higher level of trading?
Well, the first thing is trading is as much a profession as anything else. But you get somebody who's maybe spent 20 years of study becoming a doctor, and then they think, oh, I've done all this. Now I have a lot of money. I'm successful at that, so I should be able to trade well as a doctor. And then, of course, if trading were actually easy, big money would make it impossible for the average person to trade. But since trading isn't easy, big money makes it very easy for you to open an account and give away your money. So what we basically do is, ours is an entire education service and a program that could take somebody, if they do it well, 3 to 6 years to complete.
Mm-hmm. So people have to take the time they need, right?
Right. As I said, it's an education process.
Mm-hmm. Mm-hmm. But I guess, as you mentioned in the beginning, probably the biggest part is really about belief, right?
Well, you only trade your beliefs. You never trade the markets themselves. In fact, most people would be hard pressed to tell you what the markets are. They'll give you some idea, but they don't know what it is. And just as an illustration of that, I could show somebody a bar chart and we'd say, okay, we'll agree. This is the market. This represents, maybe it's a daily bar chart, but that daily bar chart might look different from an hourly bar chart. And it might look quite different from a 5-minute bar chart. And you could take any one of those bars, let's say a 5-minute bar chart, and it's really made up of tick data. And quite often, if you looked at the real tick data, the bar would not be a really good statistical representation of the tick data at all. So people don't even know what they're actually trading, but they look at, say, a bar chart and say, well, I'm trading this. And then maybe they don't know how to interpret it. So they add a moving average and they say, well, I'm going to trade if it goes above this moving averages. Or maybe it takes more and they say, okay, if these two moving averages cross, then maybe I'll do that. Or maybe that doesn't make sense either. And then they have to add all sorts of indicators that sort of make the data less and less close to what's really going on. And then maybe through some beliefs, they can begin to interpret what that means. But it's all beliefs.
So you mean basically traders are looking to trade instrumental like systems, right? And not really the market.
Well, they don't know what the market is.
Mm-hmm.
Everybody has the market's kind of a made up concept. It's all these different buyers and sellers and their psychology. It's probably best represented by a tick chart. But one of my favorite authors is Alfred Korzybski, who wrote a big book, a 900-page book in the 1930s called Science and Sanity. And the most important statement he probably made in that is that the map is not the territory. Whatever you think represent in your brain as being reality out there is not the same as what it is. And the closer it is to reality, or the better it is, the more it resembles at least the structure of reality, the more useful it's going to be. Mm-hmm. So that gets you a little bit more into some of my thinking.
So is there any way then to interpret the market correctly, or?
No, but there are useful ways to do it. I don't know what correctly is. So the way I interpret beliefs is to say, is it useful? So you could have a whole bunch of beliefs, and if you don't really look at them as to whether they're useful or not, then you can really be shooting yourself in the foot all the time. So I have people take a look at a belief and take it through what I call a belief examination paradigm. So first you need to discover who gave you the belief, and then you need to discover what happens when you have the belief. What does it get you into? And so you'd list maybe 5 or 6 things that the belief gets you into. Then you have to take the perspective of what would happen if you didn't have that belief, or what does that belief get you out of? And you'd list 5 or 6 things from that. And then you'd probably find out, you get a good idea how useful it is. And I can almost categorically state that no belief is 100% useful. They're all useful within a certain context. So even a concept like if you jump off a building that's maybe more than 2 stories high, you'll probably go splat and kill yourself. Well, that's useful within the context of being on a big planet where there's a sufficient amount of gravity to cause you to go splat. On a lighter planet, maybe on the moon, you fell 2 stories, it probably wouldn't hurt you that much because the gravity is much, much less. So it's all relative to context.
Mm-hmm. So can we take an example of belief and go through these 3 questions, basically? Just people can get an overview of what this looks like.
Okay. You want to give yourself a belief? What belief do you have about yourself?
So let's say I believe that I'm able to grow over time as a trader.
Okay. So you're able to grow over time as a trader. So where did that belief come from?
I think that belief has to come from other traders I talk to.
Okay. So there's a part of you that believes that. So I want this part of you that believes that to answer this question. And I want you to come up with 5 things that happen that you get yourself into as a result of having that belief.
Uh-huh. So I guess the first one is really to keep going, even if I have losses, so keep learning.
Okay, to keep going, to keep learning.
Mm-hmm. And then I guess it's really about not being discouraged, possibly searching for help, and accepting the idea that you cannot be best at first. I don't know if I gave 5, but...
Well, that's probably enough.
Okay.
Okay, now I'd like you to look at other parts of you that maybe don't have that belief. And what would happen if you didn't have that belief?
I guess I would be stuck at the same place and probably get discouraged about trading.
Okay, that's 2.
I guess if you don't have the belief that you can grow as a trader, you really cannot progress at all. And whenever you're going to have a hard time, you'll have trouble to stay on the right track.
Okay, maybe one more.
Okay. I guess probably going to think that all the great traders have been successful at first. So you're going to want to be successful at first, and you're going to want to overtrade probably.
Okay. So based on that, would you say that's a useful belief?
Yeah, of course. Yeah.
Okay. Well, we picked one that is pretty useful.
Uh-huh.
If it wasn't useful, then I'd ask you a question about whether or not the belief had any charge on it. For example, if you said, I'm a miserable trader and I always lose, and I'm ashamed of my performance, probably you would have shame and a lot of hurt and stuff attached to that. Mm-hmm. And it would be hard to change it until you released all the feelings, because the feelings kind of lock it in place. Mm-hmm. So this one, it's okay. It's useful. So you could just say, okay, that's a good belief to have. It's a useful belief. And it might not be useful, for example, in a context in which there was a roaring bull market. It was really easy to make trades, and this belief made you very cautious.
Okay.
So you can see there's a context in which it doesn't work. So there'll be a number of contexts, for example. Within most contexts of trading, that's a useful belief.
So what would be the most common bad belief that you see people have about trading?
Well, I would say any belief that doesn't take personal responsibility. So there's a good example of, I remember in the market decline around 2002, CNBC ran some sort of poll that said, why do you think you've lost money in this market? And they had items like corrupt analysts, corrupt CEOs, bad advisors, bad market, and a few other things like that. Well, every one of those have in common blaming somebody beside yourself. They could have asked, I didn't have a system, or if I had a system, I didn't understand position sizing, or I didn't realize that different systems trade under different market types, and you have to have a system if the market type changes. I didn't have any understand position sizing. I didn't have good exits. Or I had all this in place and my psychology was terrible. Now, if you had those as reasons, that you could fix what happened. But if you're blaming other factors for your lack of success other than yourself, then you're going to repeat the same mistakes over and over again.
So if you think that the market is wrong and the market is not tradable, right?
Well, it's quite possible. A flat sideways market is pretty hard to make money in.
Mm-hmm. But if I see people who think that the market is completely against them. So I guess that's not a good belief to have.
Well, they're probably right.
Yeah. Overall, yeah, that's so true. Yeah. And apart from belief, what are other things that you work on? Because I guess it's a big part of controlling emotion as well.
Well, the mental state's really important as well, because there's a key mental state that's involved with doing anything well. And so an example of that would be, and negative states tend to, we don't want to feel negative states. So you have something like fear or anger or guilt or something like that, or rejection. You tend not to want to feel those. And what you do is you tend to just pretend like it's not there and avoid it. It's kind of like the John Wayne syndrome, or any of the superheroes, just Arnold Schwarzenegger syndrome or somebody like that. Anybody who's a real masculine hero doesn't seem to feel their feelings. And, that's the prototype we have. But what really happens if you don't feel your feelings is that you stuff it inside. It gets stored in your body, and it's used so it's not complete, and it's used to hold non-useful beliefs and lock them in place. So you have to get rid of the feelings in order to do it. As an example, although this one's easy to understand, supposing you want to approach an attractive person of the opposite sex, and you come up to them and ask them for a date, and they've had a bad day, and they just look at you and say, get lost, and you feel really rejected, and you don't really want to feel that feeling, so you just sort of mumble, I didn't want to go out with them anyway, and so go off and sulk, and now you've got this rejection stored in you. Next time you go to approach somebody, maybe a voice from this part that now is formed to keep you from feeling rejected says, remember what happened last week? And it releases some rejection. So you haven't approached the second person, but you're already feeling rejected. And, maybe if you get brave enough to approach them, the rejection inside is very strong. And you probably ask them in a way that says something like, you wouldn't want to go out with me, would you? And they'd probably say no, and you get what you expected, and that would be it. And the only way to do that is to get rid of that feeling, is to really feel a feeling until it's gone, and just accept it and let it go.
So how do you do that? Because I feel like creating some sort of reasoning behind the feeling is always what people do, right?
Right.
So how exactly do you feel the emotion until it's gone?
Well, there's some good examples in my book, Trading Beyond the Matrix, but there's different methods. There's the Sedona method way, which is, you just accept the feeling and then just release it. It's a very mild form of feeling release. Or you can deeply feel a feeling until it's gone and it just seems to snap. That could last a while. And there's various ways of doing it in between there, but they're all something of that nature.
Mm-hmm. Of course, I guess it takes practice, right?
No, it just takes knowing how to do it and having the experience of it working. And then once you've had the experience of it working, then it's easy to accept that it's going to work.
Mm-hmm. So what other parts do you think people have to work on if they want to become better traders?
What other parts?
So now we've touched on beliefs as well as emotions. Is there anything people have to work on as well if they want to improve?
Well, there's all sorts of things. Beliefs cover everything because it covers systems, it covers how to trade, it covers all sorts of things. But all right, a good one though is really understanding that your system, that it's important to, before you start trading, to understand what your objectives are. If you don't have objectives, it's pretty hard to meet them. And objectives can be, I won't tolerate any bigger drawdown than this, and I'd like to make this much money, but only at this kind of cost, and have that very specifically defined. And then you need to understand that your system doesn't give you that. It's your position sizing strategy that gives you that. It's what position sizing tells you how much throughout the course of the trade. What the system does, so we can measure the quality of a system. So a high quality system just makes it easier to achieve your objectives through position sizing. You could be right 99% of the time, make 5 times your money every time you're right, and all it takes is one bad trade where you risk it all and you're still bankrupt. With a system like that, that's so sensational, you should be able to make billions with it, but it doesn't really exist. But you could still lose everything through improper position sizing.
Yeah, this reminds me that you wrote the book Definitive Guide to Position Sizing Strategies, right?
Correct.
Yeah, and someone told me about this, but I didn't think position sizing would be so much a big part of trading.
Well, the status quo says it's all about asset allocation.
Mm-hmm.
And most of the people who write books on asset allocation don't even know what asset allocation is, but it's really position sizing. And there was a study that looked at 10 or 100 portfolio managers over a 10-year period. They defined asset allocation as how much was in stocks, in bonds, or in cash. And they said how much contributed about 90% of the variance in performance between the portfolio managers. So they define it as asset allocation, but it's really how much.
Mm-hmm. So then how exactly do you position size your trades?
Well, it depends on your objectives. So you're getting into something that I've written like 350-page compact book, but a simple way is, that it will keep most people safe is never risk more than 1%. This means when you take a trade, you always know where you're going to get out. And so when you get in, you know where you're going to get out, which means something about where you're wrong on the trade. It might be you're in a trend and you decide if it drops, and you have a 25% trailing stop. That's my definition of buy and hold. So let's say you got in at $20, you'd be exiting at 15, and it would go up according to your, as it hit $40, your stop would now be at 30, which would be a profit a profit. But your initial stop is $5. Now, if your portfolio is 100,000 and you only want to risk 1%, that means you can risk $1,000. And if your initial risk is $5 per unit, that means you can buy 200 units or 200 shares to make $1,000 risk. So it's pretty simple to figure it out.
I've noticed, I think, is that people tend to increase their position size as they get more results. So as they get more profit, they're going to tend to increase your position size. So is it something you recommend, or is it something people have to be careful about?
Well, those are called pyramiding strategies. Or I'm not sure whether you're talking about a pyramiding strategy or whether you're talking about somebody who starts small, and as they get confident in what they're doing, they trade bigger and bigger, which could be right at the time the market changes and they're ready for a big disaster.
What would be the pyramiding strategies?
Well, a pyramiding strategy, all right, let's take the initial example I gave. You're going to buy and hold with a 25% trailing stop. So let's say you buy 1% at the beginning. When you've raised your stop to break even, so you enter at 20, now you're broken even on the first position because your stop is now at $20. Then and the price is a third of that higher. Now you'd add another position, another 1%. And then maybe you'd scale in one more time when that one went to break even. So that worked pretty well during the 1990s and the huge bull market we had there.
But is there any risk associated with that, or?
Well, sure. The price went down 50% overnight and it had a big gap against you. You'd basically lose more. Your positions wouldn't be locked in by stops and you'd lose a lot more. I mean, the Turtles did this with futures and pyramided like that, and futures have big gaps.
Mm-hmm. Yeah, that's right. That can be both good or bad, basically.
Right.
Yeah. Are there any other advice you would like to give to the listeners that are listening to this at this point?
Probably a ton of things. But, well, I have a program. As I said, it's a 3-year program, and there's 3 parts to it. And the first part of it is really getting to know yourself. It has nothing to do with trading. It has everything to do with exploring yourself. And this is at least a third of the program. So I think getting to know who you are, what your beliefs are, what your strengths and weaknesses are, what your values are, all these sorts of things is critical before you do anything. And then the second phase involves developing a business plan where you document all of this. And then the third phase involves finding at least 3 non-correlated systems that work in different market types. We didn't talk about market type much, but there's at least 6 different market types, and it's pretty insane to expect one system to work in all market types. So you can buy a pretty good system, for example, or get a pretty good system that's easy to develop that'll work in a roaring bull market. And as soon as it turns to sideways volatile, you're going to get whipsawed all over the place and start losing money because it won't work in that market type. Or when it turns to bear, it certainly won't work. So you've got to be wary of the market types and have different systems for different market types. So I recommend people have at least 3 different systems and a position sizing strategies that make money. And then there's something really interesting because I call a mistake as when you don't follow your rules. So you should have written rules to guide everything you do, and that should be part of your business plan. And when you don't follow your rules, that's a mistake. And I find that people, even who've had a lot of training, when they first start trading, are maybe making mistakes on maybe 20% of their trades. And, let's say the average mistake, is 2R. If the expectancy of your system is let's say 0.8R, and you make 10 trades, so that would give you 8R, but you make mistakes on 2 of them, which subtracts 4R. That means you've halved your profit. Your profit's now 4R instead of 8R. And that can basically ruin a system, at 70%, it'd probably destroy the profits and make the system no good. And you have to understand that.
So this is people basically taking profit early, right?
Well, a mistake is not following your rules. So it could be an entry that's not part of your system. It could be getting out before your stop is hit. It could be all sorts of things.
Mhm. So how do you avoid this? Because this is something I think all traders are doing at some point, sometimes.
Well, the basic way is to make sure all your rules are written down, and I would, recommend that you start keeping track of your mistakes. Whenever you make a mistake, keep track of it, and then keep track of it in terms of R multiples, where R is your initial risk on a trade. The average R multiple is the expectancy of the system. And then what does each mistake cost you in terms of R? And, what happens if you're 80% efficient and 20% errors? What's that costing you in terms of R? And then you can get it down to a mathematical system. And just seeing what it does to you when you're wrong or you make those kinds of errors is enough to change most people.
Yeah, because I guess it's pretty significant.
Right.
I think this is a big part of trading, basically, because I've started to track more things about my emotion and the way I feel, but mistakes are not something I was necessarily tracking all the time. So, but I've seen people who really track how many mistakes they do or like, what is the percentage of compliance for the system. I think that's a good way to do it.
Yeah, well, the trading process includes various tasks of trading, and part of it is to make sure you don't have mistakes.
Hmm. But do you find it's possible to eliminate mistake, or you're still going to make some?
So, our goal for graduation from our Super Trader program is you make at least 100 trades at 95% efficiency.
Okay, that's a good target. So I want to ask you, Van, how can people find you exactly?
Well, it's easy. We have a website that's my name, so it's vantharp.com.
Wonderful. And I know you have a lot of resources there, a lot of great things. And you
Yeah,
mentioned me as well that you wanted
we
to
have
give
a
your
free
book.
newsletter that I wrote that has about 2 articles every week that comes out, psychological, technical, all sorts of things. And, that's free just for going to our website and signing up.
And you mentioned me also that you wanted to give out your book to the listeners for free, right?
Well, I have to pay the shipping. So
Yeah. But yeah,
whatever the shipping is, they'll have to pay the shipping. But
yeah.
we're sending the book for free.
It's a good compromise, I think. It's worth the shipping for sure. So what I'll do is I'll put the link so people can get it, and we'll go from there. I want to ask you, Van, what are the goals you have for the future?
What are the goals I have for the future? Well, I'm very much into, as I said, our mission is transformation through a trading metaphor. And I want to have a big impact on the world. And personally, I don't think I can help people transform any more than I've transformed myself. So I'm pretty much on a spiritual quest to be the best person I could be.
And what is your main motivation? Is it only to help people?
Yeah, well, we get a lot of joy out of that. When somebody talks about how we change their lives by just something really simple, and we get those emails and letters like that all the time. My staff enjoys it, I enjoy it, and that's what keeps us going.
Wonderful. So I just want to remind listeners that all the show notes are going to be on desiretotrade.com. So if people want to find the link we talked about and the link to your book, it's all going to be on desiretotrade.com. And Van, I have one last question for you, which we ask pretty much every guest. It is, if you could give only one sentence of advice for traders, what would that one sentence of advice be?
Become aware of yourself.
Wow. And then the rest will follow, right?
The impact you have on your own trading.
Wonderful. Wonderful. So you have to be aware of yourself, definitely. So Dr. Van Tharp, it's been a pleasure to have you on the podcast. I think you're really making a big impact on the trading world with your books, with all you have out there. And I really hope people will check your website and your academy as well. So thanks for being on the podcast. It's been a pleasure to have you here. And for all listeners, I'll see you in the next episode. So I really hope you guys learned as much as I did from Dr. Van Tharp. I really hope you took something out of this interview and that you're going to apply it this week. Right? It's always about applying stuff that you learn here. And as I mentioned in the beginning, Van Tharp had an offer exclusively for the listeners of the Desire to Trade podcast. He's offering you his most recent book, Trading Beyond the Matrix, for absolutely free. Simply go on desirettotrade.com/57. So desirettotrade.com, all in letters, /57, the number. And you guys are going to see all the instructions to get the free book. You're going to have to enter a code if you want to get the book for free. But all the instructions are going to be there. So it's going to be pretty simple for you guys. Now, this is a really good book that you guys should check it out. And you get it for free, so it's even worth it. Now, make sure, as I said, that you pick something from this episode and that you apply it to your life, your trading, or whatever it is, to make sure that you improve every single week. And if you have any questions, connect with me. desirettotrade.com/group to join the Facebook group for free. And I'll see you in the next episode of the Desire to Trade podcast. Ciao.
Thanks for listening to the Desire to Trade podcast. To get all the information on this show, free articles, and unique resources, make sure to check out www.desirettotrade.com and subscribe. Please leave us a review and let us know what you thought about the show. It's time to become the best trader you can be. See you next time.